Interest rates are going up. If you are right now on a floating mortgage loan, stressful period because you're going to face higher costs than ever. Unfortunately, the best prevention was to avoid taking on a loan that couldn't afford, correct? On the other hand, if you are a saver, right now you are seeing validation. All these years of low interest rates, you've survived it. Right now, you are getting validated that saving is the right way to go. Unfortunately, I'm also concerned whether you would ever become an investor or not, especially one day when interest rates revert back to a more normalized level. In today's video, I'll be sharing with you updates on all the latest guaranteed and non-guaranteed places to park your monies to get interest. And more than that, I'll be sharing with you my real inner thoughts on what is a good product as well as what is a good solution. So if you're keen to find out, continue watching on. Hi guys, welcome back. Without further ado, let's start with the first idea, which is Singapore Savings Bond. If you have been a fan of this channel, you kind of have heard before me mention this many times before, correct? I have a tutorial on how to build a bond ladder with Singapore Savings Bonds. I have even a previous tutorial on why I've actually parked 83,000 in an April issue. Singapore Savings Bonds, in my opinion, is one of the few free lunches in the world whereby if interest rates go down, no problem. You have a locked-in guaranteed rate for 10 years. If the interest rates on the other hand go up, which could be what would happen coming up, very simple, just trade away your old bond and buy a newer issue that gives you a higher return. That is why it's free lunch. That is also why, for myself in my advisory work, I haven't sold a 10-year endowment plan for a very, very long period of time already. Because quite clearly, Singapore Savings Bonds is a superior product. I wish also for my industry to sell less of these 10-year products because most of the time, it doesn't really beat the effect or the benefits of what Singapore Savings Bonds can provide for a saver. Maybe the industry should innovate new products, a 10-year guaranteed one that beats Singapore Savings Bonds. Then yes, I have something very happy to champion about. If you agree on it, help me smash the like button. It reinforces some of my beliefs and hopefully together we can spread the message to more Singaporeans to help them better their finances moving forward. But never mind, that isn't right now in the pipeline yet. What I can suggest for you watching is good products, and this over here is the latest issue for October 2023 Singapore Savings Bonds. Look over here, you realize that 1 year interest right now is guaranteed at 3.21. My issue that I bought in April was 3% flat. On an average for 10 year, you'll get 3.32%. That is also higher than what I've gotten for myself. So what I could simply do is I could sell it the April one and buy this new one. But for myself, I'll be hanging out a little bit more. The difference isn't that much yet, and I'll explain a bit why. Just in case you're looking to buy Singapore Savings Bonds, do note there's a cap of 200,000 per person. You can use cash, you can use SRS. But I do strongly suggest use cash. Use that quota to be filled by cash. SRS, you have probably a long investment horizon and you should probably invest it instead. If you're looking to buy, do note closing dates. Over here is stipulated 26 October 2023, this issue would close. And then somewhere by next month, it would start to issue. But just now I mentioned, right, why I'm probably holding out a bit more. Take a look at this article. Famous investor Bill Ackman believes that 10-year treasury yield could climb to 5% soon. Take note again, 10-year rate is not Fed overnight rate. 10-year rate is in this chart over here. You would see that it's probably right now again on a new uptrend, correct? For the last few months, it seemed to be going sideways and probably even trending downwards. That's why I had the opinion maybe the worst is over. But if we see the trend right now like that, I think it's time to prepare for the worst. That also impacts the sentiment of property-related assets such as REITs. But as a REIT investor, you have to hold through difficult periods like this as well as difficult to swallow news. Singapore Savings Bonds are very valuable to you in your portfolio. I much prefer them over SGS bonds. SGS bonds, you need to hold to maturity. Singapore Savings Bonds, you can trade them away with no losses at all. It's principal guaranteed at all times. So I much prefer Singapore Savings Bonds over SGS for medium-term solutions. If you're looking further for medium-term solutions, I have something else to suggest. Because again, Singapore Savings Bonds is capped at 200,000, correct? This over here is by Manulife. 2 years, 3.7% per annum. Of course, this does not have the flexibility of Singapore Savings Bonds, but I think 3.7% more than compensates for the difference because in this latest issue, you'll be earning 0.5% less. So if you don't mind locking out for 2 years, then go for such a product. Again, this is not financial advice. Make sure that you are familiar with such products, even though they are guaranteed. Let's move on to the second product, which is making a lot of waves in the newspaper right now. It is none other than Treasury bills. Take a look at this article over here. Singapore Treasury 6-month bills are right now paying 4.07% per annum already. Wow, that was a big jump from the previous 3.7+%. And if you're looking for liquidity, I think there isn't any place better than this T-bill offer. Do not forget, if you'd like to apply T-bills, it's right now available on internet banking. You can use your cash, you can use your CPF OA, if you have a CPF IS account, and if you have CDP. I think this is likely going to be the best solution for monies you need to keep liquid, even better than, for example, fixed deposit rates. This is a summary table compiled by Sidley, and you will see that quite possibly the best, which is Maybank and RHB, are paying around 3.6% per annum only. And the guarantee is, of course, the bank, not Singapore government. So I don't really like them. I don't see a value that they provide, other than if you are unable to set up your own CDP or... What else I don't really like are high interest accounts. Not so bad, but let me show you some latest numbers. This over here is quite possibly the best high interest account, UOB One account. You would see the title reads you can earn up to 7.8% per annum on interest, but that again is the highest tier amount. Those amounts from 75,000 to 100,000. Even if you park 100,000 flat, do note the maximum effective interest rate is only 5% per annum. And again, you have a lot of hurdles to fulfill, such as crediting salaries, such as parking gyro transactions. What we need to highlight is the first 70,000 of savings is not really earning that much at the end of the day. And for myself, I have deployed a lot of cash towards REITs already. I've shared with you on that. I'm not looking to keep my money stuck just to earn higher interest and fulfill such hurdles. But again, that's my risk appetite, that's my approach. And if you really like to have a lot of liquid cash, 100,000 here is quite possibly the best place. Run up to UOB One account is quite possibly OCBC 360 account. Again, the first 75,000 earns very little. You can see just salary crediting is just 2%. You really get a big kicker for the 75,000 to 100,000 tier. Assuming you don't invest, the maximum you can get is 4.65% per annum. If you credit salary, increase your savings balance, and spend the right amounts on the OCBC credit cards. But taking bronze medal is DBS multiplier account. What has happened to DBS multiplier account? It used to be one of the best, if not the best, in previous few years. But right now, you see that you can earn up to 4.1%, and that's with clocking a lot of eligible transactions. If you are a fan of DBS multiplier account, let me know what you feel about it. Or are there further angles of how you maximize this account to your advantage? Because quite clearly, I think the rewards are not that attractive as of right now. Again, let me know if you have other solutions in the comment sections. And with that, let's move on to the third solution that I really like, money market funds. I'll suggest for you what I think is the best right now in the market. And before I get there, let me share with you what I don't really like first. This is a summary table of cash management accounts. And inside there, you'll see that there are multiple robo-portfolios as well as multiple discount brokerages offering you solutions. Let's cover robo-portfolios first. Without naming names, you would see that they give a varying range of net yield, correct? But do note again, these are non-guaranteed and they are achieved with a blend of cash funds as well as short duration bond funds. Right now, the highest promise is Chocolate Finance. I put up this summary table to show you also what you can park with, which includes cash and SRS. And if it's only for cash, there are other promotions also. For example, Mumu's Cash Plus, that was a promotional rate of 5.8%. Philips Securities actually had one that concluded recently, 5.8% also. And how they do it is they actually give the guarantee from their own pockets. But again, this is a short-term extra interest guaranteed. The returns are driven from the underlying fund. Which brings me to this suggestion that I have for you, Fullerton SGD Cash Fund. This is a fund that I've inputted for many private clients. You can see over here, fund size has grown past $2 billion already. You can use cash and SRS to purchase this. And the good parts of what I'd like to highlight are right now, indicative yield to maturity is 4.03%. And the fund has one of the lowest management fees of 0.1% per annum. What does such a fund do is that they need to extract alpha from bond solutions in the market, and so far it's been delivering quite well. And I'd like to quote, right now, it is one of the best considerations for investors seeking money market funds with risks as low as possible. If you purchase such a fund, you realize you can actually cash it out in just a few working days depending on the platform, and you can actually do up a regular savings plans to park in new monies every month when your income comes in. If you'd like to find out more, I have actually a full tutorial done previously on it. There was a period where I was actually down with COVID, I remember. So check it out. I think it will give you a further explanation of what this fund can deliver for you. And if you are looking for full return planning, look for my links below. I can help you on a one-to-one basis and piece in solutions for your own retirement. With that, sign off from here and see you in future videos. Take care as always. Goodbye.